Good morning, everybody. Welcome to another Daily Market Report brought to you by Mike Bjork. Today is Thursday, and it's May 14th. Hope you guys have a great morning so far today. We got a couple items here on the economic calendar. Tomorrow will be a really big day. Tomorrow we'll get a lot more data, but today we got some important one. The one, of course, we get every Thursday is with initial jobless claims, and they've been pretty impressive in a negative way, of course. The previous week came out at 3.18 million people applying for unemployment benefits for the first time. Forecast has been dipping downwards. We were forecasted at 2.73 million, and it came in a little higher than forecast at 2.98 million. So this is bringing the total people, what they're estimating, to approximately about 36 million people, 36.5 million people that have lost their jobs in the last 2 months. So obviously, that's a very big number that would push us right up towards the 20% mark of uh, unemployment rate. Now, the one thing that is kind of helping us save us a little bit is that PPPP or PPP, triple P program that was allowing a lot of people to carry payroll and not go ahead and lay people off. So that's kind of helping things, and that probably is one thing that would uh, keep the numbers low in terms of the uh, unemployment number here. So that was obviously a good thing that they rolled out here. We'll see how fast we can rebound. But again, these are obviously pretty high numbers here. Here's a This is the last one. Here is a pretty minor report. It's just an import price index. Back in March, it declined by 2.43%, and in April, it declined further by another 2.6%. So these are prices obviously coming downwards. We're seeing, as we had mentioned yesterday, with the inflation, seeing inflation on a decreasing level. There's really no inflationary level since everybody's kind of locked up. That there really hasn't been any pressures out there on inflationary data here. So let's go to headline news here. Stocks are down this morning. They're kind of taking, obviously the job numbers in a negative way. But also there were some comments by the president directed towards China. Basically, they're pretty hawkish comments that just talking about his displeasure with China uh, not coming out more with coronavirus, which may have been able to prevent a lot of the measures we are taking, and could have maybe enacted a little bit further and not have to gone to a full pandemic. Maybe we could have done something prior to it reaching that point. So unfortunately, it has reached that point, and of course, he's been been voicing his displeasure about it. So what he does is not exactly known. What he will, if he'll do anything, but right now he's been kind of expressing it, and there's been talk that maybe he might go resort to tariffs or something else as a punishment. So let's wait and see what happens. But meanwhile, let's take a look here, see what's going on with the bond market and what mortgage rates are doing. Mortgage rates are up by 11 basis points. 11 basis points right now, and that should be enough to give us a little bit of a boost in the pricing. So what that means is that mortgage rates should have a little bit of improvement in its pricing today. Again, we're kind of right here in between the 50-day moving average here and the 25, so we're kind of working our way back upwards. And then the Fed, of course, like usual every day, has been buying a bit of mortgage-backed securities here. Mortgage-backed securities their purchases have been decreasing, so this is why you've been seeing this kind of slowly go downwards. But they have been, fortunately, they've been keeping it pretty steady for the most part on this. But of course, right here we had the bond rollover, so we should actually be up closer to this way. If it wasn't for that bond rollover, we'd be up closer to the 25-day moving average, or rate, or pretty much right at the 25-day moving average if we had not had that bond rollover, which again did not affect pricing. If you recall that report there. But to move on here, yields are down as well. It broke below its 25-day moving average. It's just hanging just below the 0.62% range. And it's like 6.615, I think it is right now. And yeah, 0.615. So that's pretty much about it. Sorry about the ums, but we are, if you guys are in California looking to buy our refunds, please feel free to reach out, direct message me, or email me. And if you guys are ready to go, I will put a link in there and you can go ahead and start a loan application as well as upload any documents you might want to upload. And we can talk about your scenario. We work with a variety of investors, so we're not set with any one, so that way we can ensure that you get the best program and best the best pricing for yourself. All right, you guys have a great rest of your day. Thanks so much for watching, and we'll see you in tomorrow's video. Bye bye.